All right, good morning, everyone, and welcome to the City of Grand Prairie's Franchise U. This is our third session around franchising, and today we will be talking about funding your franchise. Our previous sessions on Franchise 101 and the legal essentials for funding your franchise is available on our website at gptx.org/small biz. Today we have Bobby Byram from Cadence Bank. He is VP and SBA loan officer for Cadence Bank. Please note that any questions you have, you can place them in the Q&A tab. The chat will be disabled. Also, following the presentation, I will send you an email with a copy of the presentation, a link to the recording, as well as a survey. So with no further delay, Bobby, the floor is yours.
Hello. Thanks, Kay. Thanks for having me. It's good to be here. I'm going to share my screen. I'll go over a quick spiel on myself and Cadence, what we have to offer, and then dive into some franchise guidelines. Share my screen. So, as I said, I'm Bobby Byram. I've been doing SBA lending for about 15 years. I've been at big banks, I've been at smaller banks, currently at Cadence Bank. So I have a lot of experience in this. I've been doing, business acquisition type deals, startup type deals for a long time, and it's really excited me, and it's been I think I've helped a lot of people get started with businesses. So that's me. There's my contact information. I'll share it with you, after the presentation. So if you have any questions, you can reach out to me directly. A little bit about Cadence. We're a top 10 national producer. So that we have a high volume shop. We have a dedicated team of underwriters. And so we have underwriters dedicated to SBA lending. We have closers dedicated to SBA lending. So it's really a streamlined process. We do quite a few of these, so we can get them done in a timely manner. So some facts around the program. If you have questions, Kay, are they able to chime in with questions, or should I just go through it and do Q&A after?
They can put when they put their Q&A in the chat box, I'll ask them, or if they pop up on your screen and you see them, you can answer them live.
Okay, sounds good. So some just general program facts. If you don't know about SBA lending, it's a government program. Basically, the government guarantees 75% of a SBA loan. So basically, that allows the bank to be a little bit more risky. With these startup loans, it allows the bank to extend the terms. With startup lending or business acquisition, you would probably be looking at 5 to 7 years, where with SBA, you can stretch it out over a 10-year period, even longer if there's real estate involved. And it also offers a lower down payment. So that guarantee pretty much gives you a lower down payment, riskier lending, and a longer term. The loans that I look at start at $250,000. They go up to $5 million. There are some other lenders that go down below $250,000 if you need a smaller SBA loan. And I have referrals for you if you need that. The SBA program, it can fund franchise startups, but it can also fund a lot of different things. It can fund construction acquisition, real estate acquisition, refinance loans, like I said, construction, partner, buyout, business acquisition, equipment purchase. Whenever we look at a startup, we look for first the brand, the franchise brand that you're going to be using. We look for them to have 25 to 50 locations currently open and operating so that we can kind of see the historic, franchise, how they're running, if they're closing shops or if they're expanding. So we dive into that a little bit. We look into outside income, if you have income coming in from rental properties or spousal income, that definitely helps the deal. There's no prepayment penalty on these loans if it's less than 15 years. So if you're doing just a startup with no real estate, there wouldn't be a prepayment penalty. If you have real estate involved and you're doing a term over 15 years, then there would be, but it's a small prepayment penalty. It's just over the first 3 years of the loan. You are able to pay up to 25% in each year without a penalty. The interest rates are set. SBA has maximum interest rates, and we can get into that a little bit. So specifically for franchise lending, we look to do about 10 to 15% down. So we would look to make sure that the principal, you as the owner, would have at least 10 to 15% down to put into the project. Like I said, we can do a 10-year loan on leasehold improvements. We can do the equipment. We can do working capital. Usually with the startup, you have equipment, inventory, working capital, leasehold improvements. So we want to make sure you have the working capital to get you started. Sometimes we can do maybe an interest-only period from 3 to 6 months to get you started, so that you don't have the P&I starting right out of the gate. It lets you ramp up a little bit. So the pricing adjusts quarterly, and it's based on Wall Street Journal Prime. As you know, Prime's high right now. I think it's 8.25 right now. And we typically price the 10-year products between Prime plus 2.5 to Prime plus 2.75. If there's real estate involved and we have a longer term, we can go up to 25 years. And the pricing on those products is typically Wall Street Journal Prime plus 2. As far as the collateral, we would take a first lien on business assets. And if there's a collateral shortfall, SBA does require us to look at personal assets. Now, with being in Texas, that helps you, as Texas is a homestead state. So we aren't allowed to look at your homestead as collateral. But if there is investment properties, they could be up for grabs if there's over 25% equity in those real estate investment properties. And that's only if there's a collateral shortfall. If there isn't a collateral shortfall, then we don't have to go after anything additional. And the only additional items we would go for is, like I said, those real estate investment properties. And that's an SBA requirement. We would require life insurance if there is a collateral shortfall to cover the gap. So if there's a $100,000 collateral shortfall, then we get $100,000 in life insurance policy. A personal guarantee is required on any 20% owner. So it depends on the ownership breakdown, but if you have any owners less than 20%, we wouldn't have to take their guarantee. Kind of our process for getting started is, I would have a needs list, and I would collect the initial package, basically your personal tax returns, your personal financial statement, a business plan, projections, which, with a lot of these franchises, you can go off of existing locations. If it's your first startup location, you can go off of different locations in the area. If it's your second location and you're trying to expand, you've already been around once, so you kind of know what to look for and what a project would look like, how long it takes to ramp up. So that's some stuff that we look for up front. Once I get my needs list, I would show it to our credit team. I would get a term sheet issued, so it would give you a rundown of all the terms of the loan, as far as structure, how we structure it, down payment, the guarantors, interest rate, and everything. Once that's signed, then it would go to our underwriting team, and that would take 5 to 7 business days to get it underwritten, and then we would release the commitment letter to you. Once the commitment letter is accepted, then it goes to closing. So that's kind of the timeline of getting started all the way to closing. I would probably give our closing specialist a couple of weeks to put together the documentation needed and to collect any remaining items from you, whether it's real estate appraisal or title, just to make sure the file is fully documented. Some requirements from the borrower that we look for. We look for a minimum credit score of 660. We look for business experience. So whether that be you worked as a manager in a similar franchise, or you ran a business previously, some sort of transferable experience. We look for liquidity. So we look at your personal financial statement. We want to make sure that you have backup liquidity on the first day. When you're starting a new business, there's stuff that pops up that you need to have a little bit of reserve cash for. So we want to make sure you have that. And as well, we'll work in that working capital into the deal so that you have access to that. Like I said, outside income is a plus, but it's not necessarily a requirement. You'll have to meet or exceed the liquidity and net worth requirements of the franchisor. And with SBA lending, you have to be a legal permanent resident or a U.S. citizen. That has to be 51% owned by a U.S. citizen or legal permanent resident. So that's kind of a high level. Do you have any questions, or do you want me to get a little bit more into the weeds on some part of this?
Yeah, thank you. Thank you so much, Bobby. I guess if you can provide some additional information around maybe, so are they able to utilize the 504 loan for franchising, or just a 7(a) program?
The 504 would be for real estate or fixed equipment. It doesn't fund startup expenses necessarily. So you could look at breaking out, if real estate is involved, you could look at doing a 504 for the real estate and then a 7(a) for the startup proceeds.
So with the 504, if they needed to fund the building, the space, purchase the land, maybe they could use the SBA 504 loan for those costs.
Right. But you would
Okay.
have to have a separate 7(a) loan to fund the remaining inventory, working capital, stuff
Okay.
like that.
Okay.
Or you can roll it all into one larger 7(a) for real estate and startup costs.
And what is the maximum on the 504 loans?
There's technically not a maximum. The CDC portion can't be over 5 million.
5 million. Okay. Okay.
So it
We
kind
have
of breaks out, the bank keeps 50% of the loan, and then the CDC takes out 40% of the project, and then the borrower comes in for 10%.
Okay, so for the 504 is 10% of the loan.
Yes, would be the down payment.
Someone asked if you can review the collateral requirements again.
Sure. So collateral requirements, if real estate's involved, of course, we would take a first lien on the real estate. We would take a first lien on business assets. So inventory, it's basically a blanket first lien on all business assets. So inventory, equipment, AR, whatever, all business assets. After you look at the business assets and there's usually a shortfall because we're offering working capital. SBA highly discounts inventory, and they discount equipment at 50%. So after you look at the discounted values of what you're purchasing, there will be, in most cases, a collateral shortfall. And that's what SBA requires us to try to cover. Now, SBA is not going to decline a loan due to lack of collateral. So if the collateral is not there, we move forward and fund a loan. But if you do have investment real estate in Texas, SBA would look at taking a first lien if it's free and clear, or a second lien if there's already a mortgage on it. But if there is a mortgage on it and the equity, so the equity after you look at the mortgage and the loan amount, if it's 25% or less, then it's not required to be taken. If it's 25% or more, then the bank is required to take it. But we wouldn't look at, we wouldn't look at cash accounts or anything other than that investment real estate here in Texas.
Perfect, thank you. Can you pull the page up, Bobby? I think it was the next slide. Yes. For SBA loans, is there a minimum credit score? Did you already answer that?
660 is what we, Cadence Bank, looks for. Different banks might be, different with that, but that's what we look for.
In regards to selecting franchises, because one of the things that I've noticed going through the franchise sessions that we've talked about, even when we had our franchising 101, there was conversations about an approved franchise list.
Well, they actually just came out with new guidance on that. They got rid of the franchise registry, which is, it's different for banks, and that's across all banks. So we don't have access to that anymore. What we have access to is something called Fran Data, where we can look up any franchise and see how they're doing, if they have any locations closing, if they're expanding, how many locations are open. And it kind of gives them a score on each franchise. So if anybody's interested on, what that looks like, I could help them out.
Okay, great. We have a question. How is the SBA guarantee determined?
The guarantee or the guarantee fee? I didn't go over, let me go over the guarantee fee right quick. and then
Okay,
we'll talk about the guarantee.
okay,
So there is a SBA guarantee fee, and whenever I first started, I told you how, SBA guarantees, or the government guarantees 75% of the loan.
mm-hmm,
So that basically means if the loan goes bad, if it goes into default and there's a loss, the bank is responsible for 25% of that loss, and then the government's responsible for 75% of that loss. And how they pay for that is through SBA guarantee fees. So on loans $1 million and above, the SBA guarantee fee can be anywhere from 3% of the loan amount to 3.5% of the loan amount. And that can be financed into the loan. On loans less than 500,000, there is no SBA guarantee fee. So, that's really what the SBA is trying to push, is smaller loans to smaller businesses. So, I think that's why they release the SBA guarantee fee on those small loans and are just having the larger loans pay for them. And then the SBA guarantee is highly discounted on loans from 500,000 to $1 million. So it's more like 1%, 1.5% versus the 3 to 3.5%. But like I said, that fee can be funded into the loan as part of the project and turned out over the life of the loan.
okay, so no matter does Cadence hold the note when the loan is closed?
Yeah, so Cadence holds the 25% part of the note and then sells it the 75% on the secondary market.
So no matter the size of the
So
loan, it's always 75%?
yeah, the SBA guarantee is 75%.
That's awesome.
There is a express product that's outside of the 7A product. The express product goes up to $500,000. It's a lower guarantee fee, or it's a lower guarantee amount. It's 50% versus 75%. And like I said, that goes up to $500,000. I don't think many banks would do an express product for a startup, because they want the higher guarantee percentage, right?
Mm-hmm.
But it's something that, you can ask about. And of course, there's going to be a smaller fee because you're paying the fee on the 75%. With the express, you would pay the fee on the 50%. Or actually, sorry, there is no fee on 500,000 and less, so there wouldn't be a fee.
Well, that's awesome. So the 75%, no matter the size of the loan, is that typical for all banks, or is that just Cadence? Because that's really good.
And so, yeah, that's nationwide with all banks. There is no SBA guarantee fee on 500,000 and less.
No, I was talking about the 75%. When I had asked you about no matter the size of the loan, it's always 75%. Is that across the board for all banks, or is that just Cadence?
7A loans, it's 75% guarantee on all the loans.
That's awesome. Let's see, we have another question. What are some common misconceptions about the lending process for startup franchise opportunities? Some common misconceptions.
Let's see. With franchise lending, it's definitely easier for startup lending. Some of the misconceptions are it takes too long. The SBA process takes too long. There's too much paperwork. It's a way to make a bad loan good using SBA, but the government, it's a government program, so there's been a lot of changes, and it's actually been changes for the good over the past 10 years. There's less paperwork. Really, with the SBA loan, you have the SBA Form 1919, the application, which is a bunch of yes, no, true, false questions that take you 5-10 minutes to fill out. And it's really just looking into your background, make sure there's no skeletons in the closet, make sure you're not defaulted on any government debt, stuff like that. So the paperwork has gone down. And it's really similar to funding a conventional loan now, especially when you work with Cadence Bank with the big SBA shop. It's really similar to doing a conventional deal, and maybe just adding a couple days to make sure we have all the SBA eligibility requirements documented.
I wanted to touch on a couple other options for funding your franchise, and Bobby, please step in on any of these. But I wanted to make mention to them, to the attendees, around franchisor financing, right? So in some cases, the franchisors offer financing directly through the parent company. There's franchises, they finance the fees directly. So if you're financing, I'm just throwing franchises out there. I'm not saying that this is the case. So if you're trying to franchise with the Smoothie King, there's an option that they may franchise they may finance your fees directly internally. Also, it's called rollovers as startup businesses, which is ROBSs. I'm not a financial professional, so please talk to your financial professional, but the ROBs is a method of withdrawing money from your 401k or other retirement savings accounts to fund your new business without incurring the IRS tax penalties. So you're able to roll over. All of the rollovers are risky. That's why you need to consult your finance professional. That's a way to finance your franchise as well, by using the ROBs through your 401k, and you will not incur the penalties that are typically used when you withdraw from your 401k. And then, of course, family, friends, and then crowdfunding is an online platform where you put your franchise or your business online and ask individuals. It's kind of a business form of GoFundMe. I guess that's a good way to put it. But by far, in my conversations with professionals, SBA lending and the rollovers, the ROBs from your 401k and retirement savings have been the two most highly used ways of funding franchises. Bobby, do you have anything to add to any of those types of funding that I mentioned?
No, I've done some of the ROBs, the ROBS programs, and
Okay.
SBA does allow that, so you can take out your 401k and put it into the business. The only other, SBA does require at least 10% on these projects. So the only other thing I can think of is gifted funds. If you have friends and family willing to gift you part of the equity injection, SBA does allow that. We just have to fill out a form that shows that there is no obligation for those funds to be paid back, so that we don't have to include it in the cash flow.
So when you've done the ROBs, so you can do it in conjunction with an SBA loan?
Sure. Mm-hmm.
And so how does that typically work?
Well, we would have to get a specialist involved that specializes in the ROB program. But as long as all that paperwork's filled out on their end and they get the funds from the 401k, we can use that as the equity injection.
I had a something that was shared with me. I want to share it with attendees. And kind of a one-pager, and I will email this to you all along with Bobby's presentation, but it's kind of a step of how to start your business without a loan. And this is kind of the overview of the ROBs. And as you can see, it's complicated, which is why it's not suggested you do it on your own. You will have to get a tax professional involved. But again, to avoid loans, not to take anything away from Bobby and his business, but if you have a 401k, you can utilize those funds. And I will send this over to you all as well. Okay, so do we have any other questions in the chat? What last call for questions? Please take the survey that I will send out to you all. It helps us in our programming. It helps us to know what other information and sessions you all would like to hear about. All of these sessions are free. Bobby and our other presenters are volunteering this information to you all. Our goal is to get you from ideation to realization on your path in entrepreneurship. If you're already an entrepreneur and you want to expand, we're here for that. So my information is in every email that I send out. So you can feel free to give me a call or send me an email. Next week, we will close out our Franchise U program. Next Thursday, June 29th, we will have actual franchisors here. A variety of them are wanting to come to the Grand Prairie area, but looking for franchisees. And so they will be here to hear, so you can hear from them about what they're looking for. And they specifically, a lot of them want someone that's already participate in the Franchise U sessions, because they know that you kind of have the information that can assist you in joining their team. So we will have those, and we will also have current franchisees. So other franchisees that have already gone through the process and they are current successful franchisees, they will also be in attendance to answer your questions about their process and what they did. So I hope you can join us for that as well. Any questions, any comments, please feel free to reach out. Bobby had his information on the screen. It will be in the presentation that you will receive. So this is last call for any other questions while we have the professional at our beck and call. I don't see any here. Q&A. All right.
I've enjoyed the conversation. Thanks for having me on. Okay.
Thank you, Bobby, so much. I truly appreciate you all. I truly appreciate it. All right, everyone, have a good day and enjoy the rest of your lunch.